I'll be building myself a nice little nest egg. Not only am I going to be starting my 401k, not only have I been building myself up a Roth IRA, but I also have a different type of account. Make sure to subscribe for a bunch of videos. Subscribe to my second channel, which is my backup channel for bonus videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. The job that I was working before, my old full-time job, did not offer a 401k. They didn't offer a lot of things. They offered, a little bit more take-home pay, but they didn't offer any vacation time, didn't offer overtime, didn't offer Sunday pay, holiday pay, vacation pay. They like none of that. No benefits, nothing. Just a little bit more take-home pay. So I had to choose. Well, I didn't have to. I wanted to, set myself up a tax advantage retirement account, and I had two options to pick from: a Roth IRA or a solo 401k, which doesn't have an employer attached to it. And I weighed out the pros and the cons. I was like, do I want to invest dollars that have already been taxed and cash out later on tax-free, or do I want to invest post or pre-tax dollars and pay tax and just defer paying taxes until later? And for me personally, I thought a Roth IRA made more sense, so I chose a Roth IRA, and that's what I've been working on for the last 2.5 years. But now I have the ability to make 401k contributions through a retirement savings account with the company that I work for, and I get a 5% match starting Sunday. So that's what I'm going to be doing in addition to my Roth IRA. I will still be making weekly contributions to my Roth IRA. My goal is still to max out my Roth IRA this year and max it out every year in the future. That's the plan, that's the goal, that's what I hope to do. And have something separate on the side. It's my own personal retirement account alongside my company's retirement savings account. And no, for the record, this retirement savings account, this 401k with my company, is not going to be funneling dollars into this particular company's stock. No, it's broad market index funds, which is right up my alley. That is what my Roth IRA is made up of. I customized my Roth IRA exactly how I wanted to, and it's been exactly the same since day one. I knew exactly what I wanted the structure to be, and I organized it in a way that makes perfect sense. It's a 40-40-10-10 split between 4 completely different broad market index funds. For every $100 I put in there, $40 go into this, $40 go into that, $10 go into this, and $10 go into that. That's how my Roth IRA is set up, and I plan on keeping it that way. I can rebalance it at any time if I ever felt like it, but it's as diverse as humanly possible, and I could have gone 25, 25, 25, 25, but the reason I'm only going 10%, 10% in the two other funds is because I don't want too much exposure, but I want some. I don't want to have it overly concentrated in those areas, but I want my piece of the pie, if that makes sense. So that's how I structured it. 40-40-10-10 split between 4 different broad market index funds. I have some international exposure. I have some bond market exposure. I have exposure to everything, and that's what I wanted, and it's structured the way that I wanted to. I customized it exactly how I wanted it to look, and I plan on keeping it that way. And in order to max out a Roth IRA, which, like I said before, you can create a Roth IRA right there on Webull if you want to, link in the description. But to max out a Roth IRA, right now, the maximum contribution limit is $6,500, which could be a downside to some people. A lot of people wish that they can contribute more. They're like, oh, that's such a low cap. I think it's pretty good, especially if you can afford to build it up over the next 20 to 30 to 40 to 50 years. If you have the time to do it, I think $6,500 is more than okay. More would obviously be great, but hey, it is what it is. They raised it from last year. Last year was $6,000. This year it's $6,500. I don't know if they're going to raise it again next year or if it's going to take another couple of years, but usually every handful of years they bump it up a little bit more. But to max out your Roth IRA with a maximum contribution limit of $6,500, on January 1st, you could just throw $6,500 in there if you had the currency to do it, or you can make monthly contributions, or you can make $125 weekly contributions. It's however you want. Or you don't have to max it out at all. You could put $100 in a month if that's what you wanted to do. And by the time a year goes by, that's $1,200. That's nowhere near maxing it out, but something's better than nothing. So you can max it out if you'd like. You can just contribute a small amount if you would like. It's whatever you want. That's what's cool about a Roth IRA. It's just like all the flexibility and just doing things however you want to do things. Rebalancing, restructuring, if that's what you choose to do. You don't have to go with index funds. You can go with individual stocks, although I don't think that's the greatest move. Either way, that's what a Roth IRA is. A 401k, you might have less options. The way I understand it, the typical 401k focuses on a variety of different type of index funds that you could choose from, and I think it's mostly just one big giant index fund rather than 4 different index funds the way I broke it up, 40-40-10-10 split, or 10 different index funds, all 10%. Rather than doing it that way, a 401k focuses on, one broad market index fund, which is really all you need. I just wanted to be creative with my Roth IRA. That's why I did it the way that I did it. But a 401k, money gets funneled into a broad market index fund, a certain percentage of your pre-tax dollars, and I believe you can contribute up to 75% of your pre-tax dollars, but who on God's green earth gets paid enough to do that? But I'll start off with 5% because I get that match. 5% match. Maybe later on down the road, I will bump it up to closer to 10% if I feel as though it's affordable for me to do. But at the very least, you should make the most of whatever your company offers to match. It might be 4%, it might be 6%, or whatever they offer to match. I think that's at the very least what you should do. Just my opinion. That's the difference between a Roth IRA and a 401k. Roth IRA is, 100% on your own, customized the way that you want. A 401k, you have options to pick from. You can go with this index fund or that index fund or this type of fund or that type of fund, and there's less of a selection, but it's still all broad market index funds, and you just have to talk to whoever it is at your company and figure out the best choice, what makes the most sense for you, your risk tolerance, and how aggressive you want to be. And there's just so many different factors that play a role in what the perfect fund is for your particular retirement savings account, which, by the way, you can change at any time. You can go with this particular one that's a little bit more aggressive. 5-10 years from now, you can switch on over to one that's a little bit more conservative. You can go so many different ways. You have the flexibility, you have choices. You can increase or decrease your contributions at any time. And if the company's offering to match whatever percent, I think at the bare minimum, you should be contributing that percent. So I'll be starting with 5% because that's what the match is. Later on down the road, if I find that it's doable to contribute 10%, then that's just what I'm going to do. I'll be contributing 10% of my pre-tax dollars, and the company will be matching 5%. So like I said before, hypothetically, let's just say, for the sake of simple math, $100 is 10% of your pre-taxed dollars. And if that's what I'm contributing every week, for every $100 I contribute, the company's going to be contributing $50. I'll let that snowball over time. And at that point, I'll be building myself a nice little nest egg, because I've been doing things a variety of different ways. Not only am I going to be starting my 401k like within the next, 2 pay periods, not only have I been building myself up a Roth IRA for the last 2.5 years at this point, but I also have a different type of account. This one is not exactly a tax-advantaged retirement account, although you could make the case that in a weird way it kind of is tax-advantaged, because I'm taxed at a lower rate, and I will continue to be taxed at a lower rate than the money that I earn by going to work every day. And that would just be my regular investing account. Not necessarily tax-advantaged, because if you sell at a gain during the year, you're going to owe taxes, capital gains taxes, whether it be short-term or long-term capital gains, whatever. And also the passive income that you generate, whether it be dividend income or distribution income or interest income, if they offer you interest on your uninvested cash or whatever. So you're going to owe money on that. But the way I like to always explain it, because a lot of people are discouraged, like, oh, I got to pay taxes on my passive income. This sucks. I don't want to build up passive income for myself. Well, you know what? You should. And you want to know why? Because passive income is taxed at a lower rate than active income is. If you're making $50,000 a year at your job, you're going to be paying more in taxes than the guy next door who doesn't even have a job at all, but he makes $50,000 a year worth of passive income. Whether it's dividend income or whatever, you're taxed at a lower rate. The tax code was written by business owners, landlords, and investors, and the tax code was written for business owners, landlords, and investors. You're allowed to do it. You're encouraged to do it. Most people just don't know that there is a way to do it. And what I like about the way I'm doing things is I have a savings account, which I don't really believe in saving currency long term, but I'm just kind of riding the high yield wave right now. So I have a savings account with a high yield. I have a CD account with an even higher yield. I have my regular investment portfolio, which is not tax advantaged, although you could make the case that it kind of is, because I'm paying less in taxes on that than I am on the money that I make from my job. I have a Roth IRA, a tax advantaged retirement account. I will soon have a 401k, which is another form of a tax advantaged retirement account. And I'm just trying to make the most of absolutely everything, and I'm trying to be as smart with my currency as possible and put it in the right places so that I could make as much off of my currency as I possibly can. And my priority is to obviously increase my income, but my even bigger priority is to set myself up for retirement. Make sure to subscribe for a bunch of videos. Subscribe to my second channel, which is my backup channel for bonus videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account.